following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the February 18th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And I know for a fact that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I, that we do everything we can to have an extraordinary Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. When we make that one small little shift out there, it means that you and I can find the gift in every set of circumstance that the universe is going to throw at us. And that's what it does. That's especially what it does when it comes to trading and investing. So today, we'll go take a look at that universe. Of course, I'm here to serve you. Absolutely grateful for your presence. Together, we can go search in that universe of stocks. Maybe you're looking at something that my eyes aren't on. Maybe you've got a different idea out there. So feel free to call it in at 877-927-6648. You know, 4 eyes are better than 2 out there. Of course, internationally, you can also reach out to us at 727-445-1044. This is Wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow futures are trading off about 30 points, trading out at 17,970. You've got the S&P futures down 4 points, trading out at 2,091.75. NASDAQ futures off 4 points at 43.77. You've got Russell 2000 down about 2 points at 12.21. The King is on the move this morning, up 228 ticks, trading out at 94.37. Gold's back 90 cents, no big deal, trading out at 12.0770. Silver's up a nickel, trading at 16.42. Light sweet crude back $1.58 right now. She's trading out at 51.94. Natural gas pretty much flat here this morning. A quick peek across the globe. Let's start off, see what's going on over in Europe. We've got the DAX up 40 points right now. She's trading on at 10,935. Let's go check in on the DAX. See what it is doing out here. We know about the DAX, a couple different patterns out here. Number one, we know that it broke through its consolidation level at the 10,033 area. It did that on the trading session of January 16th. This was a fairly decent consolidation out here. If we pull this back, let me see, where did the consolidation begin? All the way back here in September of 2013. So pretty nice consolidation level that's out there. Point-wise, that was 1,675 points. That says inside the DAX, its upside target, 11,708. Does that mean that that's what it's going to go hit, right away? No, but if we did, and we've also got A to B equals CD patterns. Let's take a look at those. Your A point down here, October 16th. Your B point is up here right around, looks like the high of December 5th or so. The C point down here around December 16th. So what we know is that the DAX has made the 1-to-1 A to B equals CD to the upside out here. Just because that's all it's made, does that mean that that's where it stops? Absolutely, positively not. It sure doesn't. Only 60% of the time are you going to see a 1-to-1 A to B equals CD to the upside. The next level inside of the DAX is your 1 to 1.272 level. That's at the 11,429. I think that is more likely the longer term target. Of course, you're dealing with 11,429 to 11,708 is where the DAX is very likely going to run to. How will we know if the markets are going to break out? Well, we'll get a signal from the FTSE out here. If we go take a look at the FTSE, that's back 14 points as we speak right now. Come on, switch over there for me. Okay, we can't have the good folks who are sitting here waiting, trying to figure out, is the FTSE getting ready to break out? Well, if we take a look at the FTSE here, now the FTSE is traveling in a 800 point, 789 points to be exact, but we don't, we use these as guidelines anyways. So an 800 point, 13-month consolidation. And that breakout gives you a projection. If we see now yesterday we had a pretty decent bar, quite frankly, as it was getting over that hurdle area, that 68.75 note. You may say, hey, what's that 68.75? Why is that so important? Well, 68.75 actually takes us back to the swing point out here on May 22nd, 2013. That's the top of the so-called box of the consolidation. That high, 68.75, May 22nd, 2013. As we take a look at this chart here, we can see a number of times as price tried to get up to that level, we saw that act as resistance. We actually saw a little bit of a piercing of that area. And piercings, is kind of like a piercing on your, well, I can't really tell you what a piercing on your body is like because I don't have any piercings on my body. But what we did see here yesterday is we actually saw a close above that 68.75 area. We really haven't seen any closes above that. So the question is going to be, is this market truly just getting ready to break out here? And the reason that we want to go ahead and pay such attention to what's going on inside of the DAX, inside of the FTSE, is really because of this chart right here. Hopefully you're watching this on Tiger TV. If you're not, you're listening in on your radio or your mobile device at TFNN.mobi. We absolutely love you for doing that. Don't forget, you can come to the homepage at TFNN.com, upper right-hand side. You'll see Tiger TV. You'll be able to watch us there. Of course, if you're an e-signal platform user, you can watch us live just simply by going to the eSignal apps button. You'll see that. Of course, you can catch the archive of this show on Channel 9. 9 a.m. show is on Channel 9. 10 a.m. show is on Channel 10. How did that work out? The chart that we're looking at, the top portion is the DAX. The center portion is the FTSE. The bottom portion is the S&P 500. These markets, for the most part, work in unison out here. So when we take a look at these breakout patterns that exist in the market, that's the reason why that's the reason why I spend time with you this morning, each morning, trying to understand what is it that's going on inside of the FTSE. So the FTSE, when you break through any type of barrier out there, typically inside a market, inside a stock chart, price comes back, tests it, to see if it's a real breakout. So that's in, you're above it right now. You're at 68.83 as we speak. Fairly decent bar closed yesterday right at the session high, so not too shabby. We'll see if this can get some additional follow-through. If not, and price moves back into it, which is what I suspect is likely going to happen. I don't know if it'll be today. I don't know if it'll be tomorrow. I don't know if it'll be Friday. I don't know if it'll be Monday. I don't know really if it'll happen at all. I suspect that that's what we're going to see out here. Then we're just looking for some kind of retracement. What kind of retracement do you say? Well, if we just take a look at our retracement ruler and go from the January 15th low to this morning's high, because that's the only thing I've got to go with. I'll pull back to 66.83, even 65.36 could be possible out there. In those points, these numbers here may just simply change depending on what happens today, tomorrow, the next day. But we do have a potential breakout inside of the FTSE, so we want to keep one of our eyes on that. Now, we've got over in Asia last night, well, the Nikkei certainly was open. It was up 212 points. I don't know when I can't recall, somebody put in the den for me the actual Chinese lunar calendar year, the year of the sheep, I believe it is. I know it's got to start soon if it's not started already out here. Now, in the case of the Nikkei, what the Nikkei did last night, I wish I had volume for you. The year of the goat. I thought it was the year of the sheep out there. I'm not sure, but thank you, Jay. If we take a look at the Nikkei got up over a swing point last night, the December 8th piece of it. Now, what I don't know is whether or not it had volume. Nonetheless, you get over it. We may have it confirmed A to B equals CD to the upside inside of the Nikkei. If we take a look at what that says here, that says your swing point, your A point. One of them is going to be your price point on the low of October 17th, 2014. Your B point, the swing point that was crossed, that was December 8th. And your C point, this nice little hammer candle back here on January the 16th out here. 1-to-1 A to B equals CD gives you a price projection of 20.094.37. Looks like the Nikkei on its way up to at least that level out there. Let me switch back over here. The 19th, so that would mean that today over, so maybe last night's session was the was the last session here inside of the Shanghai and the Hang Seng out. Let me see if it actually traded. Yes, the 17th. Today is the 18th. No, so it did not trade. So they closed early for their celebration out there. That's in the Shanghai. So no reason for us to really pay attention to that, I would think, for the rest of the week out here. Let me take a look at the Hang Seng out here. It should be the same thing. Now, the Hang Seng was, in fact, open last night. But with regard to the Hang Seng, what's going on out here? It's got an A to B equals CD price projection. Says that he eventually wants to get up to 26,755. Okay, enough with the international markets. Let's go check out, see what's going on here currency-wise. Let's take a look at the currency pair. I know you want to take a look at what's going on with our stock market, and we'll do that. I just want to see what's going on with your favorite currency pair in mine, and that is the euro Japanese yen. Still not being able to get up to that 0.382 retracement level, which is 137.65, kind of consolidating here along the highs. If the markets are going to break out, if the FTSE is going to really break out, if the U.S. stock market's going to break out, we're going to see this currency pair move higher. We just don't have any real significant indication as to what it wants to do as we speak right now. Let's take a look at the Great British Pound. The Great British Pound, as we had pointed out a few days ago, this thing had broken out of its trend. It's having another nice morning here. It's on its way up to about the 1.58 level. The Great British Pound has been in this nice descending price channel. It broke through that on the trading session of February 5th, much like the FTSE should do as well. It broke through, has come back, and it tested that level over the February 6th, 9th, 10th area, the 11th, and then boom, broke out of there with conviction. Wide-ranging bar out there. A couple of days of just simply small-bodied candles moving sideways. That is not the case today. Of course, I don't know how the day is going to end here, but looks like this is on its way up to that 1.5808 level. That's what's going on inside that currency pair. Let's take a look at the euro itself. This is what's fueling the fire here inside of the U.S. dollar index. If we take a look at the euro, it just simply isn't doing a whole lot out here. Truly consolidating sideways, working off an oversold condition. Quite frankly, that has more of a bearish than a bullish look to it. That's just the way it looks. It does have a significant enough reversal bottom out here for us to pay attention to, and that says that until it breaks through the support, the low of January 26th, the only conclusion we can draw is that it's trying to put in a short-term bottom. But if you take out those lows at 1.1097 inside of the euro, then support will have failed, and that says price will run lower. I think it's right around the 110 area, and maybe right around the par area inside of the euro. But we'll take a look at that as we, should in fact that actually take place. If we go take a look at what's going on inside our futures market out here, let's go take a look at the daily. Let's look at the daily out here for the Dow. Inside of the Dow, it's struggling to get up over and at least test the December 26 high. That is 18,051. That is its target out here. Now we have seen price get slightly above yesterday's high, which was 18,024. So far the high 18,028. Hey, any close below? Well, if today you see the Dow, if we see a bit of a sell-off, price get down below 17,891. Doesn't have to close there. Doesn't even have to close below that. But if it does get below there and then finishes red on the day, meaning just, one little tick below the open, you'd actually have a key reversal session. I don't know that that's going to happen, but it is something for you and I to keep our eyes on. This is Steve Rhodes. This is TFNN. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much changed here in the futures marketplace. Yesterday I shared with you. I showed you a picture. You might remember this picture here. Let me put it up on my screen here right now. Right here. So I showed you. Boy, this is the second time I tried to do that. That's so weird. I thought I clicked on something and something else came up. I'm going to try this one more time. Right there. So let's see. I might have clicked. There we go. I showed you this picture here. Now, this is a great picture. It's a great image. I got several emails on it. This is the image that shows a image of either, depending on how you look at it, somebody will see either an older, ugly type of woman, I suppose, out there. That's how it's described. Or others will look at this image, and what they'll see is a pretty woman. Now, I broke that image apart. I'll do it for you out here. Now, the reason I use this is because symbols are so important to you and I. Symbols are so majorly important to each of us out here, and what it helps is I broke this picture apart. This picture here, as I broke that one image apart, really I think clearly shows the image of the older, or what might be referred to as the uglier looking woman here. Here's her nose. Here's the portion of the nose. Here's her lips. Here's her chin, and so forth. And then of course I broke it apart so that you could actually see what's referred to as the younger or the prettier woman out here. Now, the email that I actually got, several emails that I got, great emails. So always thanks for keep those cards and letters coming out here. But one of the emails was, "Hey, Steve, I went through that. I watched the archive, and I actually couldn't see. I couldn't see the pretty woman. No matter whether you broke it apart, no matter how it was out there. I looked. I couldn't see it. What does that mean?" And the end of the email was, "I feel like I've hit a wall." Now, folks, metaphors and images are just simply so important to us. They work in trading and investing out here, and I'm going to show you how to relate that. You see, the easiest way to learn anything is always to be able to link the known to the unknown. So I don't know if you yourself have ever, felt like you've hit the wall out there. Just go back, take a look at your past. Maybe you've felt like this, where you've actually run into a wall, or maybe you felt like this, where you've run into a wall out there. But here's the thing. If your thought process is that you've hit a wall, and when we take a look at the FTSE out there, we were taking a look at its wall, weren't we? We were taking a look at a line of resistance out there. And so maybe instead of focusing on what I'll call maybe the negative, or, I talk about when I kick the morning show off that life happens for us, not to us. A person that is thinking that they've hit a wall is not feeling like life happened for them. Instead, they're thinking that life happened to them. So what we've got to do is we've got to reframe it. We've got to elevate that. You've got to elevate that by saying, hey, maybe that wall was actually put there for what? That wall was put there for you to break through. Maybe the wall was put there for you to be able to climb over. Maybe the wall was put there for you to actually be able to jump and run over that wall. In any of these images or anything else, when you run into a wall, folks, it is put there for you. When we take a look at the stock market out here, hopefully you're watching this on TigerTV, you're taking a look at a Dow chart. This is a weekly chart for the Dow. One of the tools that we use out here to help us understand the walls inside of the market are these horizontal trading ranges. Our man Bud Rolfs, he termed it primary trading ranges. In his work, he was doing everything visually. Hey, we're all visual out there, and that works. Now, we've got terrific program. If you're an e-signal user out here, what you really should do is you should go over to Traders Formula Co-op. You should go check these guys out. They're the ones that developed this tool for me. They're the ones that automated it so you can apply it to every chart for whatever time frame. This happens to be the levels of walls out here. In fact, when you climb to the top of the wall, you break through it. Let's say you're the person that's going to climb over the wall. Maybe you should stand up there for a second and look back. Look back at where that other wall was at that you also had to break through. Because when it comes to trading and investing, when it comes to understanding your horizontal trading ranges, the question is going to be, how far is it before you can anticipate your next wall? Because guess what? In life, there's going to be a next wall. In trading and investing, there's going to be a next wall out here. And what it typically is it's typically equal to, in distance, the same distance as where your first big prior walls. In the case of the Dow, that was at about 10,612 to about the 11,000 to about the 93.26 out there. Those were the real major walls. And all we have to do is take that difference and then just keep adding it. When we take a look at the Dow right now, it's got a major wall. It's not 18,000. It's at 18,047. Its next real hurdle out here is at 18,322, 332 out there. Now, not that we're using these as exactness out here, but it is never amazes me. In fact, it doesn't have to amaze you. You just need to know that in life there's walls. In trading and investing there's walls out here. And that real wall inside the Dow is several hundred points higher out here, 18,332. This is Steve Rhodes. This is TFNN. Let me help you break through your walls, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got down 54 points. Trade out at 17,994. S&P down 6 at 2,094. Composites off 7 points at 48.92. Russell 2,000 down a couple of points. The DAX up 40. The FTSE's down 18. Gold's back 50 cents. Silver's up 6 pennies. Light sweet crude back about 21. To the upside, you've got Jack. Jack in the box. JACK is a ticker symbol. When was the last time you were in a Jack in the Box out there? I almost can't really remember. So it would have been 40 years ago, 35, 40 years ago. In any event, Jack in the Box is up 6%, up $5.80. Virgin America up 7%, up $2.44. Angie's List up 34% this morning, up $1.60 out here. Floor Corp. FLR, that's up a couple of percent. I recall looking at that stock chart with our man Z in the Tigers Den. Maybe it was last week, I think. You've got Boston Scientific, BSX. That's to the upside, 9%, up $1.40. To the downside here, you got Fossil. That's leading the charge, $15 and 15% to the downside. Garmin has lost its way. It needs some direction. It's down 9% off about $5. Kihu 360 Technology down about 6%. That's off 347. LinkedIn down $3 and change. You've got Metasets Inc. down 10%. That's down a couple bucks. GoPro down a couple of bucks. Chevron down $1.48. ConocoPhillips off $1.30 out here. Let's go take a look at some of these equities, see what they're doing. Let's go check out Jack in the box out here. JACK gapping up this morning, taking out a swing point, doing it with volume. That swing point was on January the 13th. That was a high of 84.81. That had volume of 931,000 shares. You've already done 626,000 shares out here. What did Jack in the Box do? They report some earnings out here. I did first quarter revenues, $468 million versus $450. That's a nice beat on the top line. Now, I don't know if they did that through an acquisition or if it was same-store sales. That would make a bit of a difference. It would to me. Net income, $35 million versus $32. So they were able to grow the top line, but looks like they did it at a cost to the, they beat the bottom line, but a $200 million beat on the top and only a $2 to $3 million beat on the bottom line. Looks like they were giving away whatever it is that they're good at giving away. Nonetheless, if we take a look at the stock chart, looks like it's at the 52-week high, maybe all-time high out here. Yeah, looks like all-time high. How about these restaurant stocks out here? Amazing when we take a look at these restaurant stocks. Who would have thunk it? Back here trading at about $20 back in 2011. Today, 93.67 out here inside of Jack in the Box. Ticker symbol out there, JACK. You've got Flowserve, FLS. Is the ticker symbol up $3, up 4 and almost 5% out here. This looks like this is running into a bit of maybe it's broken through a trend line, a shorter term trend line inside of Flowserve FLS, the ticker symbol. That trend line, it's breaking through it as we speak. Well, it broke through it a couple of days ago. That's a short term trend line. So now what's it running into? It's going to take on some horizontal resistance out here. Let me go ahead and turn a couple of things off on this chart, make it a little bit easier for you to look at. Make it easier for both of us to look at, quite frankly. Give me a moment here. We'll turn a couple of things off. That way we can see exactly what it is doing. We can always turn these different tools back on. We'll leave it like this. So now as we take a look at it, it's broken through diagonal resistance out here. Now what it's going to try to deal with is level 1 and level 2 of PS day resistance. Level 1 out here is 62.74. The more critical level is 65.19. And that's when Flowserve, FLS, had gapped down with 2.6 million shares. Now, it's at 156,000 shares as we speak today. Pretty tough for me to do the math on that, but the math says, I guess if it were to keep up this volume, it could easily do 2.6 million. What it needs to do is close above 65.19. If it closes above 65.19, it will have repaired that window. What does that mean? That means it will have closed the gap. You close the gap, that area of resistance basically, whoosh, it vanishes. It goes away out there. Until that time frame, you've got to anticipate that is resistance. Ticker symbol there, FLS. We've got Virgin America. Looks like it is galactic. It's lifting off, up about 8%, up $2.88 as we speak right now. Virgin America. So there's an IPO. Okay, this IPO'd back on November 14th out here. The low was $26.50. You're at $37 as we speak right now. Basically, not enough data in this chart for me to for it to mean a hill of beans out there. What does a hill of beans actually mean out there? Is that even the proper metaphor, hill of beans? I know what it means when somebody says they've run into a wall or they feel like they've hit the wall, so to speak, out there. I know what connotation that comes with it. And all you got to do is you got to change those things around out there. You can't let this stuff hold you back. In the case of Virgin America, I don't know what to tell you this equity is doing out here. So we're just simply going to move beyond it. Not enough information from a technical standpoint to give you anything anything of significance. Let's take a look at Angie's List out here, up 39%. What did Angie's List do? And now Angie's List fell from grace. Now, they had fourth quarter revenue of $82 million versus $68 million. Not too bad out there. Looks like a beat of maybe 30% or so, if my math serves me correctly out here. It probably doesn't. Net income of $15 million versus $3 million from a year ago out there. So they obviously found a way to cut costs or put those costs in some other drawer, and they'll pull them out another day. We take a look at Angie's List out here. Did make a nice hammer low. How about that? Makes a hammer candle low all the way back here on February 2nd. It's going to get down to 436, closed out at 470 out here. Let's take a look at Angie's List. Let's go see, did Angie's List out here, now Angie's List had made a island reversal top. Yeah, this is a nice equity out here for a textbook out here. So if you're wondering what an island top reversal, son of a gun, look at that. So we talk about these this is actually a pretty good stock to take a look at. So we'll just use this as Technical Wednesday. I think Basil's got Technical Thursday already wrapped up out there, so I can't be using Technical Thursday. But we can. I think Technical Wednesday might actually be open. Doesn't even make sense, does it? But we'll just simply use it. We'll simply go with it. We'll go with the flow, not FlowServe. We're taking a look at Angie's List out here. Now, Angie's List, this thing had a gap down. If I go further back on the left-hand side of the chart, I may find a couple of different things out here. But if we take a look at this thing here, gapping down on the trading session of October 3rd, does it with volume of, 12 million shares. Now, what's interesting here, really you got level 1 and level 2, just as we took a look at on, I think it was FlowServe that we were taking a look at. I said that the upper level was really the key one. Well, in the case of Angie's List, price actually got above level 1 and the trading session of February the 4th out here, but it had gapped up just slightly. If I go ahead and I blow this up on my screen for you, I'll do that. And we'll put off to this. Whoops. Got to stop drawing lines. Keep drawing lines out. It's like Etch-a-Sketch. If you forget to turn your tool off out there, it just kind of screws with your artwork. Now, what happens here in the trading session of February 4th? Well, it actually gaps up. The high of the prior session on the 3rd was 1828. The low of the next session was 1842. Leaves a gap. Then what does it do as it comes into this resistance area? Boy, this would have been, not that I like to short $20 stocks, but might have been a great option. Clearly was a great play on this when we take a look at Angie's List, because it was coming into resistance, doing it with light volume, and then creates this little island top out here, doing it on February 5th when it gaps down. The high of that was 1817, so it created that little island reversal pattern at a resistance area. Now, we take a look at patterns as it was making that hammer candle out here. As it was making that hammer candle, let's go look at the A to B equals CD to the downside. Let's go see if it actually completed that pattern. Now, your A point out here inside Angie's List was from July 18th, 2013. Your B point looks like it's right around November 25th, 2013, and your C point is that hammer candle on February 4th. 1-to-1 A to B equals CD would have taken you down to about $3.36. It never made it all the way down there. Instead, what it did was it got down to that low of about $4.36 out there inside of Angie's List. Now, it's having a fairly decent day today. This thing's got a lot of work cut out in it. If this is the first sign of strength actually off of the bottom. So if we pull this back out here inside of Angie's List, so it makes that hammer, does it on February 2nd. Now you've got your first sign of strength actually was yesterday, but that candle session was no wide price spread. Somebody must have known something out there, or looks like they might have inside of Angie's List. And because we saw some decent volume, 1.8 million shares. You've done 3.5 million shares today out here. So what do you do? What to do at this stage? Don't chase Angie's List out here. No high volume low or anything, but what it's doing, it's running into this candle session right here. This candle session right here is basically your supply line. This is your supply line from the trading session of October 23rd. That's a group of individuals who purchased this equity anywhere between 662 and 801. And how do you think those folks were feeling back on February 2nd when the price got down to 436? Not so good. Now, the question is, we'll have to see what happens volume-wise out here. And, it's moving up pretty good with volume. That's your supply line. Angie's List really needs to crack through that resistance level there of about the $8.01 area out here. But don't chase it. No need to chase it. Wait till we get a little bit more information. Let's go take a look at some things here. Moving to the downside, you got Fossil. FOSL is a ticker symbol. That's leading the chart large here, gapping down. Looks like with pretty decent volume so far. 2.6 million shares out here. Yeah, that's pretty decent volume inside of Fossil. Let's go try to figure out where this thing is falling to out here. We got to keep going back. So in the case of Fossil, it's coming back into an area where this thing had broken out. Now its breakout looks like Fossil may get back to that area. We'll put about 3 lines on this chart out here. Okay, now I'll come to the left-hand side. So we can see the sign of strength inside of Fossil took place. This is where price is pulled back to as we speak right now. Its sign of strength was back on August 7, 2012. 7 million shares back there. Now, today in trading, you've done 2.6 million shares. So you're coming back hot, hot, hot. Now, as it's coming back to that level, we drew 3 lines on our chart. One of those lines, a moment here. There we go. One of those lines was at a price point of 82.61. That's going to be level 1 that you're going to be paying attention to, but it's coming back with a pretty good volume. Level 2 is going to be 79.58. Fossil, FOSL, the actual buy on this could be around the $70.42 level. That's at $82 right now. So it's coming back hot, and that means wait, wait, wait. If we go take a look at Garmin out here, GRMN is the ticker symbol. Also out with numbers, 803 million in revenues versus 759. So killing it on the top line. Bottom line, I don't see it out here. I don't see it on my screen, so we'll just simply go and see what the equity itself is doing. So gapping down this morning, 800,000 shares trading so far. The swing point that it's moving into had volume of about 2 million shares, and we can see here was the sign of strength inside of Garmin. This level's been tested. It's been rejected in the past. That's the price point of 49.46. The question is going to be, will it get rejected one more time, Johnny? Well, if we take a look at that breakout, that was on the trading session of February 19th, and that was with volume of 9.4 million shares. Pulling back so far today, 843,000 shares, and we have seen 17 minutes worth of trading. So 49.46 is going to be a key-ish type level for Garmin. If it's going to hold that area here, what you'd like to see it do is pull back into the trading session from October 2nd and do it with less than 5 million shares. Otherwise, the potential, I do say potential buy inside of Garmin would be $47.31 out here. Let me put this on a weekly. Maybe it does have a weekly high volume high out here. I can't tell, but we will find out here momentarily. Does it? It does not have a high volume high, but that 47.31 level should be, doesn't mean it will, should be good support. If it cracks through there, you've got a hammer candle from the week that began February 3rd, and that says price ought to pull back to 43.03 to 45.66. GRMN is the ticker symbol. Okay, let's go see. Hocus Pocus Dominocus. Let's go check out and see what else we've got inside the market for us to take a look at percentage-wise. Here we go. Let's take a look at this one. MDAS. This does not have the Midas touch. This is Metasets Inc. Down 12% off a couple of bucks out here. Looks like they may have missed. They missed, let me see here. I see Wise, Chairman and CEO. Appoints. So they're appointing a new CEO out there. Of course, they've announced earnings out here. So that's so-so. Let's go take a look at it. Let's go see where this is the weekly chart, as long as I've got the weekly chart. So here's this kind of high volume-ish type bar. Not really a swing point, but that's what it's trading into. That takes you back into February of 2011. Let's put this on a on the weekly chart as well. It's got maybe a bit of support out here at the swing point from June 3rd. That be the week that began June 3rd. 2.9 million shares, but you've done 980,000 shares in the first 2 days of trading this week, so it's coming back in that area fairly hot. Let's take a look at the daily, see what kind of volume today. 684,000 shares, so most of the volume coming today. This is testing a swing point from back here. Oh, this does not look good. This looks like the beginning. Well, not the beginning. This looks like, markdown number 2. Markdown number 1 inside this equity took place right here on the trading session of July 31st when it moved down with 2.8 million shares. This is Steve Rhodes. Of course, this is TFNN right now. We've got the Dow trading off 28, S&P down 4, $3.50, composite up $1.80. You right?
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. That was off 33. S&P's down 5. Composites off about $3. Russell's down $1.80 as we speak right now. If we just try to sum up where is it that we're at in the market, let's go take a look at the VIX index. VIX index right now moving higher this morning. It's straight out at 1649. The key level to be watching today is 1729 out there. If you see the VIX index close above 1729, Stevie's not talking 1730. 1730. He means above 1729. Then that says, okay, you've got the beginning of a retracement, the beginning of a pullback. That's where real damage can be done in the market. The VIX index. You know what's amazing to me is this. I talked about the person who wrote me the email about they felt like they had hit the wall out there. They'd hit a brick wall out here. And I did a workshop. So if you feel like that when it comes to your trading and investing, go sign up for my newsletter service and go check out the workshop. It comes with it, the workshop on the VIX index that I did last week. Here's the thing. Let me tell you metaphors that totally screw with you. There's a lot of folks out there, they talk about the VIX index as being the fear indicator, right? You hear that all the time. First of all, it's all BS, okay? It's all before Steve and other things out there. Listen to this, how people can go ahead and use this as a metaphor. They use this as a metaphor. They call it the fear. If the VIX index is trading lower, you'll hear people say there's no fear in the market. Now, if somebody says to you there's no fear in the market, does that make you feel more comfortable like coming in to buy the market? Or does it give you more fear? Think about it. When people say, hey, there's no fear in the market, typically it scares people off. So that means when the VIX index is higher, that it should be just the opposite. Then all of a sudden there's lots of fear in the market. Look, folks, you got to get rid of some of these metaphors out there that just simply become your walls out there. I can help you break through all those walls. I want to help you break through all those walls. Kind of like the Jack Nicholson, you want me on that wall out there. So come on over to the homepage at TFNN.com. Try out my newsletter service. You can do it for 30 days out there, and I'll help you break through all kinds of walls. You'll be able to get access to that VIX index, which you want to, because you can use this for your trading and investing. Hey, folks, it is wonderful Wednesday. Have a great day. Stay tuned because hour 2 of the Trader's Edge will be up next. Take care, folks.